Hey folks, this is episode 43 of Long Shots, our weekly podcast where we like to discuss all things business and all things finance. And this is Nikhil Arora and I have with me Shahar Tupran. Hey man, how's it going?
Good. It's pretty good. I'm looking forward to today's chat yet again. We have an eclectic mix, as you like to say, of people coming in this season. Today's another interesting one.
Yes, and I think we should check the thesaurus for synonyms for eclectic. I think that's a word which has lived its life.
Yeah, it's reached saturation now
on this podcast. Thank God this is a weekly edition, so I'm hoping that most listeners do not remember it and think of it as fresh. But no, I mean, it is an eclectic mix of people that we have. But before we go in today's guest, a friendly reminder to everyone, we are streaming on Spotify, Deezer, iTunes. Our channel can be searched off as Long Shots, so do search for it and do subscribe so that you get that nice notification every time an episode goes live. And introducing today's guest of honor, Mr. Vatsal Srivastava. Hey Vatsal, how's it going, man?
Hey Nikhil, very happy to be here with you guys in your office, and it's a very exciting platform which I see you guys have created over the last, I think, it's been 12 to 18 months.
Thank you. Thanks a lot, man. It's been it's a pleasure to have you. And before we kind of, I think we are going to talk about a lot of things today, kind of partially driven by your background, your experiences, and also I know that you are an avid financial commentator. You read a lot on policy, you read a lot on markets. I'm sure you'll have a lot of interesting things to say considering the present economic environment where things are slowing down, but sometimes they're not slowing down enough. So, we can kind of go into that. But quick, I would say, bio based on our extensive LinkedIn research.
We're very good at it.
Yeah, we just search for your name and it comes out, right? And Vatsal, you've been around in I think multiple countries, right? You studied at St. Stephen's, then you were in INSEAD. You had interest rate. You have looked at the interest rate desk in Citi in London. Then you also have a fairly active stint as a columnist, financial markets commentator. I think your latest stint has been at Reuters. Yes. So yeah, all very exciting stuff.
Sure.
And I was wondering, in terms of your background and work, it's pretty fascinating because mostly you have people who are either in the commentary side of things or in the market side of things. You have done both of them. Mm-hmm. Which one do you like more?
Right. So I would say it's a mix of both, but I think something which is more closer to my heart is definitely about, with to do with writing and sharing my opinion to a wide audience. And I think it really started off, I had one of my first internships at NDTV Profit back in the day when I was at Stephens.
Oh, nice.
So in second year of college, it was the peak of the bull market, 2007-8. A lot of stuff was going down, all right or wrong. We know now in hindsight, but obviously back then it was everything's right, everything's rosy. So, I was on a stipend of $10,000 a month, and then I was just doing some research for this show they had on NDTV Profit called My Stocks. Mm-hmm. And it was a daily show where people called in to the news anchor and they're like, should I buy this? What are you expecting from the results? So I was just doing some little research on L&T. And, every analyst out there was saying it's going to beat expectations, the quarterly result, and the price had fallen the last 2 weeks. So I just decided, since I'm here and I've done all my work, and obviously I had no trading experience before this. I was 19 years old that time. So I decided to speculate in one futures contract of L&T. And, in a week, it went up 5% on leverage. So I bought my first pair of Oakleys with that money.
Yeah.
So that got me really thinking that this is great. You're reading up on stuff, you're researching, you're understanding everything about the industry.
Yeah.
And it was very different from me that time because I was doing a pure mathematics course, stuff like real analysis and just differential equations and just drop into the world of finance.
Yeah.
Although this wasn't typical finance, but it was at that time being in a kind of a financial...
You're not actually studying finance, right?
I wasn't really studying finance, but then there's a way to study finance and there's a way to study practical finance. So, if it's something to do with stocks or derivatives, and especially if you're kind of dabbling with a little bit of money, it becomes more serious, at least in my mind, right? Rather than just studying a theoretical book. So that's when I got really hooked onto the markets as such. And my previous exposure to markets had been, of course, while growing up, my dad was a journalist. So like he was based in Bombay for many years, where he used to cover financial markets for the BBC. So then at that time, I remember, him covering the dot-com boom and the bust. And as well as a little before that, the Asian financial crisis. So like all these things were like in my head, and that's also what kind of led me to NDTV Profit and just figure out like if financial journalism would be my piece of cake. But during that stint, so I got practically kind of attached to the markets in terms of, yes, it's a medium to make money and good money over the short term also, right? So and that was when I thought, whatever I do in the future, I'm gonna like somehow be very closely connected to the markets, whether it be in the form of writing, whether it be in form of an active trader or an investor.
That's awesome.
So
do you still trade actively?
Yes, very actively. I do dabble in and out almost every day.
Okay, good. And do you unofficially give advice to friends and family and when to get in and out of positions?
Yes, I do.
Okay, that's good.
In fact, like I kind of do manage a few accounts also of some HNIs in Delhi.
Excellent.
So
we'll have a conversation after this offline as well.
Sure.
No, that's good to know. I mean, this is as like most traders that I've met, because of I sort of worked in an environment where I was interfacing with a lot of traders as well, and you see this pattern fairly consistently, who've dabbled with it, got their hands dirty, and not you made money, but I know an equal number of people who lost money, right? They couldn't buy their Oakleys, but it's never stopped them. They recovered it. So it's an interesting way to start. It's not from the textbook, like you said, practical finance.
And the interesting thing was I saw the best of the market and I saw the worst of the market within 6 months. Because everything blew out. And it was like the complete opposite of a V, right? It was like an inverted, very sharp U. So I saw the best of the bull market and I saw the worst of the bear market. And I also saw how fast things can change after that, which was like the March 09 bottom. Right? So you saw like 3 cycles in a period of 1.5 years. And if you were like kind of, even as a student, if you were reading books and if you were reading columns, you're just following like financial commentators, there were like so many educated opinions as to what's going wrong, what's going right, why did it happen. And it was really interesting to me at that time to see like how they could let this happen for the 5-6 years before that. And how arguably the greatest central banker which had lived till then can come out with a statement and say, actually, we don't have a framework to model all of this. So everything was really interesting. And I think it is a lot to do with the function of that time period per se. Like if I did that same internship with say 2005, obviously luck has a part to play in life and markets, right? So like maybe I wouldn't have made that money or lost that money or whatever. Basically, times wouldn't be so exciting in the markets. But then that's what really kind of got me hooked onto it. And then went back to college, came third year, then I kind of joined one of India's largest prop trading houses called JP Capital.
Nice.
So I was one of the first USD INR futures traders because the contract had just been launched then.
Wow, man. FX trading is challenging.
Right. I mean, it is challenging. I think any form of trading is challenging, even like whether it be commodities or bonds or whatever. But in the sense that I always felt that it's literally the most kind of macro driven product there can be, which is FX. So that's when like say that internship taught me to like, there's a very like narrow approach looking at a company, but like the world of FX really opened me up to so many data points, right, which I should be following, which I should be tracking. Obviously there are too many, nobody can be like on top of them all the time and be a kind of an expert, but that was the start.
But I mean, one is looking at an asset class as a commentator.
Right.
Another is getting exposure to it.
Right.
In your case, are you always aligned in that from that perspective? Because I mean, I see that you write a lot on like broader macro, but I'm sure that you're looking at like equities at a micro level.
Right.
But do you prefer to write on stuff that you are betting on, or do you prefer to keep that separate?
I prefer to keep that aside, and I've always preferred to keep that aside. Also, now you have to keep that aside due to regulations and stuff. Like you can't like openly say or recommend a stock. Like it's very like you will get into trouble for that almost always. But like I mostly like writing about more macro themes, more like bigger trends in the markets, like what's happened to Japan or the yen. Because like as a professionally, I started trading FX, as I said, like it wasn't like equities, right? So, and that was related to literally everything from the US jobs data coming out to what the ECB will do next. So like these things are not something where you can just be like, okay, I think this, and anyway, the readers really, at least the Indian reader, which was my platform, which was ET, Business Standard, Indoasian, News Service, First Post, right? They are not really interested in where the euro is going. Yeah. Like they are more interested in knowing if the ECB and the Fed will ease at the same time, and whether those global like tailwinds would help the Indian equities, right? That's all like connected. So like I'd never had to go to that depth of really saying that, you know, like I never had to be like very regional. I didn't have to be like, okay, this is what's gonna happen in the US, so this is what the ECB is gonna do. So like there were light columns, but like giving broader themes. And
but how about like looking at like stock picks or something? Did you ever consider that?
Well, personally, yes.
That I'm guessing flies pretty well here, right?
Yeah. But I never wrote about it, right? Okay. At most I wrote about sectors, like say if the auto cycle is gonna turn, if like has the NBFC crisis bottomed out, stuff like that. But like I would never say go out and buy a Bajaj Finance and like shorter capital first or an IDFC first, right? Because you can't do that now. And even 4 years back, I don't think like people were really looking for that kind of content, right?
If you thematic ideas.
I mean, you do have a lot of headlines, say on websites and apps like Money Control and Bloomberg Quint, like here are the top 10 stocks to buy.
But they kind of tread on that fine line, right?
Yeah, they do.
Not really advice, but more of like a tip or
but if you notice, most of them have just copy pasted brokerage recommendation. It's not the author himself who is saying that, you know, I've done my research and we at Bloomberg Quint are like, okay, NBFC stocks are bottomed out. Because I think SEBI is pretty strict on that front. Right. And we have seen in the past, I think we'll get to that pretty much later, like in terms of the role of the financial media and stuff. Like there have been instances where, you know, journalists have stepped the line. Like I'll give you an example of, say, the Fortis deal, which was going to happen. Like if you just see the amount of tweets these financial journalists did a week before that, and they literally moved the stock price, right? So, and I wouldn't say it was fair and ethical journalism. No one had a clue what's going on. You don't know when a PE fund is going to enter or whatever it is, right? But I think, so personally, I've always tried to stay away from this, even though I might have researched or like through my network had some, not like insider information, but to some extent non-public information, but you know, you kind of exercise your judgment and don't put it out there when you're not supposed to.
Right. I mean, in terms of, I guess we can kind of then bridge this conversation into, as you alluded to, what's right and what's not so right when it comes to financial journalism, right, in India. Now, obviously, if you are, like as you mentioned that there might be often occasions where you had access to non-public information, but you played that role with a lot of discretion. Right. A lot of people don't do that. Right. But you've also worked in Singapore. You've seen like I won't say the Western context, but at least a more developed context. Right. Yeah. Where do you see the gaps lie when it comes to, you know, because I guess it's again from a regulatory standpoint, if there's a lot of overhang on financial journalists, that's also not the right way to go about it. So what kind of precedents did you see in terms of, you know, ethics, information dissemination, especially for a non-market player, which I guess a financial journalist is typically, right?
Yeah. So I think especially at Reuters, so I was like the Asia Markets Correspondent for a stint. And so obviously because of kind of icon terminal and all the contacts the journalists have developed, like you do get a lot of information, say even from authorities, like say a Bank of Japan official speaks to you before he actually goes into the BOJ meeting. Right. But it is like there are no safeguards. The reporter can obviously send in that piece of information to the desk editor, and if we flash it on the screens, like you would see a reaction in like say the dollar yen, right? But then it's really the motivation as to, do you want to treat this as breaking news and do you think of it as a value add to your overall business, right? So not to sound as if too loyal to Reuters, but like say a Bloomberg used to do that all the time, right? So because, and of course that's why they are kind of,
one to hit the post, right?
So and they are kind of doing better just for this thing, right? Because like if they hear something about Boris Johnson, they won't use 3 or 4 sources. Reuters or say a Straits Times. Obviously, Bloomberg is better at something, so I don't want to like get into that thing. But like there are checks and balances. Like you would need a certain number of sources to kind of break this news. But certain players like they just do it in one go.
But those are organizational checks and balances.
Those are organizational. I think. So you wanting to know something like?
I mean, I'm wondering from a regulatory standpoint, is there some framework there already directing how this information can and cannot be disseminated, especially in the jurisdictions that you worked in outside India? I don't think there's a lot here like on paper, right? There might be some ad hoc, retrospective, punitive actions which might happen from time to time, but there's no rules-based framework here, correct?
Yeah. No, but I really think even though like people are scared in India too, right? Because they know once the action is taken, like it would be bad, right? So like I think things have really considerably improved and they still have a long way to go in India. But I think from a rules-based system or a framework, I just feel people, at least like what I saw in Singapore and London, they have more restraint from their, like on their personal sides also. Like it's more from an ethical standpoint than saying that, okay, I have to operate within this rules-based system. Like in India, like say personally me, like I wrote a lot about cryptocurrencies back in the day, like this was 2017, 18.
Okay.
And I owned cryptocurrencies.
Okay.
Right? So ethically, I should not have written anything about cryptocurrencies. But as long as I gave the disclaimer that, the author owns Bitcoin or Ripple and he has exposure, it was fine. But say at an organization like Reuters, where I did pitch a story on the 10-year anniversary of Bitcoin to the editor. And she said, do you own Bitcoin currently? I said, no. She said, have you owned Bitcoin in the past 18 months? I said, yes. She's like, no way you can write the story. No way you can be a part of the story. You can help on this story by getting sources and context and quotes. But, and this was not a written rule, right, Nikhil? It was just like...
Ethics.
Ethics. Like, it's
but there are two schools of thought here, right? I mean, one is, now I'm kind of getting into a slightly more philosophical bend that if you have skin in the game, are you more objective then? Or if you're completely out of it, are you more objective then?
Right. So I think when it comes to financial journalism especially, because it's, like there is a framework, there's a logic, there's an analysis to how you lead on to things. I think it's very hard to be biased in your articles, right? It's not the same for, say, a political journalist if like a so-called liberal, which is famous now, is writing something, say, on a Modi policy, right? So you could clearly see his bias, but like, I don't know. It's like if I'm going to write purely from an economic perspective on even something like the Swachh Bharat program, I can't totally take it in my ideological direction because I'm going to use data points, I'm going to use evidence, right? And there's a limit in which I can take it to the other end of where I'm trying to go with it just based on because I feel a certain way towards a political party or a certain ideology.
And that's pretty much one of the reasons why we kind of refrain from commenting a lot on politics, because we just feel that when you look at like business news, it's just the process itself is analytical to a certain extent, which kind of corrects for any kind of imbalance that might creep in. But I mean, in terms of business news media in India in general, if I would ask you that, like we often feel that why is it that there is always so much hue and cry about like Nifty and Sensex and equities, whereas there are so many other asset classes that are not even touched.
Right.
Or sometimes we feel there's a lack of like specialist reporters, who don't really know what they're talking about. I mean, do you have any kind of beefs with the space or even some things that you feel are done well?
Sure. I mean, first of all, to begin with, I think since you said equities, like the number, I think what percentage of the Indian population is in the equity space, I think it's maximum 2-3%, right? Even less. So from a demand point of view, or from the content generation point of view, I mean, the people they're targeting are the ones focused on equities itself. Because I remember MCX launched the interest rate futures a couple of years back. On the first day, Stancy traded one contract just for like fun, just that something happens on the exchange. There was hardly any coverage. They launched the VIX, which is so widely followed in the global markets. Like, people actually make their strategies on SPX, which is the S&P 500 with respect to the VIX. But here, just the number. Some traders say it now and then, but there's no coverage in the financial media as such. Because I think what it boils down to is how tradable that asset class is. So, the story with the Indian debt market, like, the
lack
players.
Of depth and all that, right?
once, I think when the government takes measures and you get more people participating in these asset classes, only then would there something for people like me and other financial journalists to report on this.
So you think it's a function of lack of activity rather than lack of
I
audience?
think it's a lack of activity, yes. And also, where will the retail audience participate, at least in India right now, for the foreseeable future, would be in equities, right? Because say a country like Japan, housewives are trading the dollar yen in a huge way. Like the retail participation on the FX market there is almost 20 to 30%. Sometimes it could cause a flash crash when Japan is shut and something happens in Turkey. So one pair like the yen TRY falls and that causes havoc in every other cross. So you don't have like say you and me trading USD INR here. You just have basically it's a market of hedgers and very professional speculators. So it's still not deep even like in the FX market to that extent. So you will see after equities, I think FX is covered pretty well by the Indian media. Then of course we have this fascination for gold. Yeah. So you will have so-called all the commodity reporters are there focused on gold and silver more. Very rarely do they actually go on and talk about any other metals. Oil is one thing. So I think...
But why the retail penetration is not high enough? Do you think it's like because everything kind of gets clouded in a consumer interest debate very quickly and hence the regulator is apprehensive of broadening the scope of these asset classes? They just think they are too complex?
Well, I would say it's a mix of both, right? Because for the longest time, say if I want to trade a dollar yen sitting in India, which is one of the most liquid pairs, we can't do that, right? It's not it's not legal. We really don't have a fully convertible capital account and all that stuff. And committees have sat on that.
Sure.
Let's see what happens to this GIFT City. They're trying to make it an international hub, and maybe there'll be more of MCXs there where you can trade like global benchmarks. But for now, I think it's just the Indian audience. And I don't think it's so much to do with really what the government feels is like they don't want to force their view on investors or the retail participants on what to do or what not to do. But they just happen to be in a few asset classes. Right. And even the asset class which can go up to 6-7% and you're still at 2-3%, which is equities. I think there's a long way to go there. So I really don't think other asset classes can come up anytime soon.
Because I feel equities is also a fairly sophisticated asset class if you come to think of it. Right?
It is.
It's not something which is easy to look at.
Definitely
to form
not.
a view. You need to do if you want to go about it technically, you need to do a fair bit of work.
Yeah. Yeah. And obviously, we all have the same story, right? You ask anyone in your family, what do you think about the stock market? So, most of them would have a horrid story to say, stay away from the markets. If you want to invest, just go to a mutual fund. They don't do, direct investing, which is fine, though, because there are a lot of professionals out there doing this. But even just your first opinion you get from people, which is that, I'm scared of the stock market because retail investors, by and large, have always lost money.
Right.
Unless you're a smart retail investor, which again is a small percentage. Yeah, it is true everywhere, but I think just take the current scenario, right? Just take the Indian markets. You just look at the breadth of the market and it's such a narrow market. You just have 10-20 stocks performing and I'm sure the retail money is not all there and they've lost a lot in the mid cap and small cap space. Yes. And every now and then they get caught in a rally. Then they're fooled or whatever, lack of a better word. Not really fooled, but now's the time of the revival. Now the earnings upgrades will start. Now see the momentum in the economy. But it's unfortunately it's not played out that way. And
so I imagine you're not very surprised right now at the so-called at least the benchmark downturn of stocks post-budget, right?
Right. Yeah. And I really think the budget was just an excuse. It's just an event which got out of the way. I think since 2015 actually, for 4 years, we just had 80% of the markets just doing nothing, right?
But the other 20% are so big that they swing up.
Right. But then that, I don't know, that's true. If you're an FII investor, or if you're a very sophisticated kind of HNI here who would just put his money in say the HDFC twins and the Bajaj twins. But, what happened to the whole kind of India infrastructure consumption story? So and in the last few weeks, you've also seen very high P stocks being sold by FII. So that's.
To be fair, I used to think, Shahid, when we were discussing the skewness of benchmarks.
Yeah.
I mean, after that, if you even look at like Nifty 500, which is like broader, right? I mean, on a PE basis, that also I think has been fairly overvalued, right? I mean, so I guess that overhang of the big stocks does carry on to the other guys as well, in terms of appetite.
How do you sort of go about, let's say you're a retail investor, you're a smart guy, and you want to look for equities? What is your discovery / research / execution life cycle? Like, how do you, is it just news media, or how do you do that at a retail level?
Well, I mean, first of all, there's nothing much to be discovered now in the Indian markets, right? So the first starting point, at least for the last 3.5-4 years, has been you play within a basket of 20-25 stocks. So that's your starting point. It's really not taking a sectoral view or taking any other view, right? It's because it's basically just been financials and consumption stocks which have led the rally, and I'm including NBFCs in that. Right?
Okay.
So select autos, but you'll see like not more like what's happening there also.
But is it sort of a value bent, or is that
no? It's it cannot be a value bent because the stocks which I am talking about right now, at least for the past 4-5 years, they all at any point of time, by any metric, whether it be financials, you're looking at like adjusted book value or just their loan growth or their commanding P's or like
it's all growth.
It's all very, very high, but you need to like. So I think right now, as an investor in India, like it's obviously pays off to be very like psychologically smart. So you always have to be ready to pay a premium at any price. So like in 2015, you were buying an HDFC Bank or a Bajaj Finance. You were paying out of your comfort zone because you can't have that whole margin of safety or value kind of methodology when it comes to investing in India now. As we speak, I mean, things are subject to change, which they will, and as any market participant would change. But so that's the first step. Like you'd see what's performing well. So it's also like a mixture of momentum strategy with quality, right? So if you have financials which are doing well, you have consumption stocks which are doing well, you have select autos which are doing well, you play within that basket. There is no point predicting, okay, when will the infrastructure cycle turn? When will the, when will this lending really start? What are the SME businesses and which mid caps can I hunt for? Or like,
why do you say that? Like, why is there no point in that?
Well, you can. I mean, you can do that research.
Work, right?
It doesn't work.
Reward ratio doesn't check off.
Because according to the methodology, you would come at a safe buy zone for everything which were available, right?
Sure.
But cheap things in India just get cheaper. And more expensive things get more expensive. So you gotta get used to that mentality and that whole side.
Is it because the pool itself is so narrow?
Because the pool itself is narrow, and like who's the incremental buyer in Indian equities? Always the FII or some large domestic fund, right? So like FIIs do not dabble in these stocks. Whenever the Indian mid-cap rally starts again, it would be the Indian retail guy or the Indian fund houses, obviously backed by the Indian policymakers who do something about it. And then the FIIs will come. They'll buy mid caps and small caps when they see the momentum and the earnings actually happening. They will buy it on expectations because they are okay holding it like or buying at a more expensive ratio once they are sure.
Right.
But so I don't want to be like people who I engage with or who have a certain like school of thought like me. We never wanted to be in that space of trying to predict when the downturn in half of the market ends and where we can value buy things, right? So for us, it's always been like kind of, okay, like it's a Bajaj Finance or an HDFC Bank or a Kotak Bank, right? There's no point going to the lower level, although you might find a lot of value in a federal bank.
Yeah. Right.
Or say you would see when is SBI going to turn around, right? Because it's very simple, like the amount of money the government has infused in PSU as a part of the recap package since 2015. That's little less than the entire market cap wiped out since then. So just by this, like why would you ever want to screen a PSU bank stock, right? When you're seeing consistent loan growth, clean management and corporate governance has now come to the fore. I think it's never been more important than it has ever been in India, right?
Yeah.
Like you have a guy from HDFC Bank, Aditya Puri, saying like, I'm a banker. I took Vijay Mahalia out for lunch or dinner or whatever. But then I called him back and said, no boss. And and that's the whole problem. That's the whole crisis. Like you could just call, say, someone in the you could just call up, say, the financial services secretary if you wanted to. and just say, GMR needs this role or so and so needs this loan.
I think
that's the clear distinction,
the
right?
myth that has been broken is that earlier people thought this is only true for PSU banks. Right?
Yeah.
I mean, that I think is now trickling down to
Right.
the wider financial services sector.
Yeah.
In terms of in PSU banks, obviously, I'm pretty sure that the Ministry of Finance called up a lot of people when the last NPA issue started trickling in. But that kind of when you look at governance, it's interesting that you raised that point. One of the other big pieces that I find personally missing in a big way in Indian financial news media is lack of investigative journalism. I actually don't see sufficient number of scoops.
Yeah.
There's one Cobra report, was it one?
Then the credibility of the publication becomes a question mark. But for instance, if you look at WSJ, they did the entire Theranos thing, right? It was not even a listed company, right? I don't see though. They come out as more as a retrospective exercise rather than because often, in terms of the sheer level of content, it's more common to see, startup awards and those awards and that awards. In terms of, because I think corporate India is kind of a big stakeholder in the media
That's true.
value chain itself, right? Is that the reason?
That's definitely one of the reasons. And I think also if there has been some steps which might help in what you're saying, that investigative journalism. So the news, say the national broadcast policy, which is being talked about, because they're take the case of the whole Anil Ambani and Rafael scam, right?
Yeah.
They really filed defamation suits against anyone who wrote even a line about them.
Right.
Yeah.
From the smallest website, which almost nobody reads, called The Citizen, to your National Herald, to even the big newspapers, right? So I think from a media owner's perspective, or whoever the promoters or is infusing equity, because look, it's also a broken business model, not just TV channels, but even a lot of print publications or web publications. So first of all, the investment for this is high. You really need to put your resources and go out and do investigative journalism against what? So since you said it's so controlled, or there are some stakes owned by the business community in that. So
advertising revenue.
So I think it's I would not be too bullish on that. To see some really polished investigative journalism coming up. Even if you and it's just not in business journalism. Take the Indian Express for example, right? Back in the 90s, early 2000s.
But before you finish that point, I think wasn't it in this budget that there was some possibility of FDI in media as well?
Right.
Do you think things might change after that?
Well, it's just to talk till now, but I think time will tell. I can't really take a call on that. Right. But it would definitely be a
kind of FDI that's coming in. Because
Mauritius and
Cayman Islands.
Yeah. It might just be their money coming in through the FDI route. So.
Sorry, please continue.
Yeah, you're sort of giving an example of Indian Express, I think.
No, so I think it's just not in business news. It's also in other areas of journalism where we are not seeing much investigative journalism now coming through. Look what's happened to Tehelka. What's become of Tehelka, right? And Indian Express, which was its whole tagline is journalism of courage. But do you remember in the last 5 years a really investigative, hard-hitting piece on something? It was just that coup story which they did on the front page. But I don't know if you would categorize that as investigative journalism, but we're not seeing that across the spectrum.
I guess
it's not just.
I guess they would say ICICI was their stint,
right?
To some level.
Yes, and that also came out after many years because people had been talking about the story. I had a few friends in FP.
This is drawing room conversation.
Exactly, yeah.
Right.
So you can just imagine what goes on. Editors are holding on to this story, then they're what shall we do with it? So it's
was the Videocon in the 20 stocks that you would put?
Oh no.
No, it's interesting you say that. And so what are your views on the going forward Indian ecosystem, Indian markets, Indian economy? If you were to take, feel free to not put any names out there. But
sure.
Thematically, are you bullish this space?
Well, I think eventually if you want to make money, you always have to be somewhat moderately bullish. You can't really have a very pessimistic view for a long period of time. But it's very clear to all of us that nothing is firing on any cylinder as of right now, right? Mm-hmm. Whether it be consumption, autos, but autos has a lot to do with, say, the NBFC lending freeze, which has happened. Even banks, Kotak Bank came out with this numbers, its loan growth is almost flat.
Yeah. Right. HDFC reported yesterday as well.
Like, so you've had like, and these stocks also like FII selling was witnessed last few weeks. So like you can see like things are trying, like the froth is getting clean definitely. And the froth was always there.
Yeah.
But it's just that they kept building onto it because there's nothing else to like kind of buy, right?
Yeah.
But in terms of when it comes to consumption, especially rural consumption, I think signs are positive. Like in terms of like, you have the inflation, which is like now we're in a comfortable zone. It's neither picking up nor falling. You have you do have liquidity in the system. It's just not, you're not able to do anything with it over the last 45 days. You have not a dovish, but you have at least the central bank and RBI which has finally said that we would be accommodative.
It's more centered.
Yeah, for a prolonged period of time. Like they've accepted that, there's no, like the markets can really look forward to policy rates being, whether you might call them low or like accommodative, for the next 18 months at least. So I think especially in terms of rural consumption, that's one sector, one theme which I think can like, pick up from here. And it's been on a downtrend for the last, I think like 12 to 14 months. You have like stocks like Godrej Consumer Products, Dabur, even Britannia. You have an ITC, which is like at a 52-week low. So I think, but they're all showing signs of bottoming out.
Yeah.
And if I would just look at the price action of stocks, I would say that in terms of the economy, we would like probably bottoming out like say 4 to 6 quarters ahead. So I think you felt much of the pain, you will feel much of the pain, and you pick up an ET or a Business Standard, you read all the pessimistic news.
Yeah.
And usually it's time where like when everything is going bad, like because things turn very fast.
Yeah.
That's also there. Because you can't wait for month on month numbers to really say that, okay, now we found the bottom, right? But I think like autos are a big drag right now. So I think if we see a recovery there, then it could be, like really build up into something else as of now. But
autos, do you think it's purely a demand story gone flat, or there are also, you think, supply constraints? Like we keep on hearing of like EV push, and I think the industry is pretty, kind of reluctant to. I won't say reluctant. Maybe the policymakers are being way too aggressive with it.
Yeah, they are being. I think that's the big problem. Because people are really scared, especially investors, whether this is indeed a demand problem or whether it's really a structural problem out there, whether like, say you have Rajiv Bajaj, who's come out and actually said that, like
calm down.
There's literally calm down, chill out. There's a time and place for everything. Maruti's talking EV, Bajaj Auto's talking EV, even like your Asia Motors, Royal Enfield, like their management has also been traveling abroad to see.
Because I guess you can't blunt force these
and we don't just have the infrastructure for that, right? Like that's the whole problem with this government right now. They like the end result or the end themes they like to play with. Okay, electric, EV. There's a whole road which we have to be built.
Yeah.
I mean, who will make the batteries? Who will make the charging stations? They have no clues to that. They don't have any answers to that. And even if they do, good for them, but they're very bad at communicating that, especially Nirmala Sitharaman said she doesn't care about the markets. It's the whole debate is what she's carrying to the budget. I mean, what do you say?
Yeah,
but like there's one thing, I'll just be a devil's advocate here. In terms of, I think the government's official line probably has been, like especially if you look at something like infra. I think in this budget, everybody was anticipating some sort of a spending splurge. But to be fair, with the kind of fiscal lockdown you have, it was, I think, a wrong expectation to start with.
Yeah.
But okay, even then, there was this 100 lakh crore infra target. If you look at the budgetary support compared to that number, it's nothing. It's peanuts. And the government always says that, oh no, we'll have a PPP model. We'll actually, private investors have to come in. I think they are again and again kind of taking this hands-on, hands-off approach, right? But private investment won't just come in on its own, right? I guess those structural problems are have to be addressed first.
Right.
I guess that's the argument they're making in EV as well, right? That we'll just set the rules and then the ecosystem will develop on its own. But probably the rules are not there yet.
Right. Rules are not there, and like you're wanting to disrupt an ecosystem which has flourished here. And like we talk about India, we talk about like, what manufacturing hub do we have? So at least two-wheelers, like whether you take Hero MotoCorp or Bajaj, like they're globally well-respected brands, right?
Yeah.
You do hear of a person talk about the Bajaj motorcycle or the Hero motorcycle. Well, not in the same breath as one of the top ones, but like they are known brands and they are like important job creators and an important manufacturing base. So they're just like trying to disrupt everything for the sake of disruption, I would say. Because everyone knows eventually we are moving to that model of electric and EV.
Yeah.
But there is no clarity. So I don't see and without clarity, without like policy clarity, I don't see how any foreign investors or even like big private investors domestically can really, funnel their funds into this right now.
I mean, there are kind of positives also, right? There, in the sense that if you look at I think the entire EV story which comes out in the popular narrative is the passenger EV story,
Right.
Whereas actually a lot of work probably is happening on the commercial EV side, right? I mean, if you look at like electric buses, if you look at commercial vehicles where there's shared ecosystem.
Yeah.
I think there are a lot of pluses there, but no, point taken.
Yeah.
I mean, in terms of at least the narrative of the passenger EV story, there's a fair bit of mismatch.
Yeah.
In terms of announced targets and what's going on the ground.
And all this needs to be communicated. That's the important thing. If you just follow the Twitter handles of Niti Aayog and your Amitabh Kant's, they're just tweeting stuff.
We started with saying let's not take any names, but I think that destination is long.
We have to be accountable. Someone has to be, and we can take names. We can take names. But what I'm saying is there's a lack of clarity. And I'm not treating myself as a market participant or investor, just as a citizen of this country. We want to hear clear, communicated stuff. That's all. No, There's not much to ask for, right? We don't want an idea.
I miss the press release era, which was pretty controlled. You knew that there will be one person who's going to actually give an official statement.
Yeah.
Not have 20 parallel tweets.
Yeah. No, it's what do you think about do you think the next big market catalyst, if the US Fed cuts rates, which is I think end of July, you think we'll see some of that?
Yeah, I think so the US cutting rates is probably very much priced in, at least in the US yields and global markets. And I think India has kind of decoupled in a bad way.
Oh, really? Okay.
Right? I don't think we are to really build our expectations on some.
Are you referring to the FPI outflow in terms of decoupling?
Yes, I mean, yeah, but I also think in terms of just sentiment, of course, the data shows that, but I don't think we have, say, Powell cutting rates and the US markets again scaling to an all-time high. I don't see that as a reason for investors to be bullish India, at least for the short term. Till we see a revision in our own kind of earnings and just on the ground economy stuff here. Because it was very interesting actually. So the markets, I really think the markets forced the hand on Powell himself, right? Because till I was in Singapore and we were talking about the US 10-year yields being at 3%. And they were it's just not happening because you couldn't see that in the retail sales, you couldn't see it in the NFP data, you couldn't see it in inflation. You had the other Fed members talking, especially the St. Louis Fed members saying that, there's no way rates can increase.
Right.
And you see no one's talking about the Fed dot plots anymore because they're always where it's going to be revised upwards. But the good thing is the US central bank listens. It's not it didn't just make a view that we want rates at 3% so that when the recession comes we can take it to 1.5%. So the economy is in fact in terms of the headline number it's good. Yeah. But they still, you can say, has been ahead of the curve, right? And they've accepted the situation.
Yeah. They're calling it insurance cutting or what?
Yeah.
No, that's true.
No, I mean, in terms of the economy in US at large, I mean, I think if you look at corporate earnings, I think, wasn't it recently that it hit the longest period of corporate earnings expansion ever? I was reading somewhere. And obviously now it's kind of mellowing down.
Yeah.
But I mean, plenty of things still there to drive things, right?
Yeah.
Well, in terms of driving things, another I think favorite topic of yours, and I'm pretty sure India is ripe ground for that asset class, is cryptocurrencies.
Right.
Yeah, I mean, that is fascinating.
Yeah. What is it first?
What's happening there? Can something happen there?
Yeah, well, that's really interesting, and it would be really foolish to bet on something. So let's just kind of keep it to what we think of it right now, right? So I think first things first, at least for Indians or people in India like me wanting to, take a position in crypto, of course the government's killed that for us,
right?
For sure.
Right.
And they've had their reasons, right? I think we can go back to that point of when you were saying do the policymakers want to safeguard investors and their capital? So of course it is arguably, if you want to call crypto an asset class, the most volatile asset class there is in the world right now. So from that perspective, just taking that logic, I think a lot of people would have got in at the wrong time. They would have lost money. Then there was the whole thing of how do you tax these people who've made money, although very few in India actually made a lot of money. But I mean, that's done. So what's done cannot be undone. So I mean, that's a chapter which is closed, at least in India. I still know a lot of people who've transferred their cryptocurrencies to wallets elsewhere.
Right.
And also what's happened globally, which is like the crypto bubble, if you want to call that, is kind of over.
Right.
Because again, it's like the Indian stock market really. You have Bitcoin, you have Ethereum, you have Ripple, you have Bitcoin Cash.
Yeah.
So the top 4 are making like 92% of the overall crypto market cap universe. And the so-called altcoins, which got multi-billion dollar valuations till about 1.5 years back, they have almost crashed to, meaningless values. So clearly, this space is here to stay. That is one thing which, from a very price action point of view, we can say. Because if it was a bubble, it would have burst, right? We saw once Bitcoin rally to 1,000, which was in 2013-14. Again, it crashed. Again, they're always willing buyers. And this is smart money. We have the likes of Fidelity, who are kind of actively investing in crypto. You had talks of like Goldman Sachs opening their crypto desk up.
Right.
Which I think they still have, but it's not just in the media.
Right.
So you have like actual financial big institutions dabbling in this space. So obviously they see some value in holding it, right? Now,
so do you think it's they see a value in holding it, or they see a value destruction in not holding it, because they're like, I'd rather be part of a group which is collectively wrong, rather than with you only.
Yeah, I think you're absolutely right in that sense. I think it's FOMO. It's the fear of missing out, right? It's like, if I don't own Bitcoin,
then I look
and
foolish.
Bitcoin is the future, then I look foolish. And also, I think to this extent, the whole idea, which is like really not so much to do with finance and economics, which is like this rebel, like, okay, banks cause the financial crisis, we need our own digital currency. Like you see all these kind of Bitcoin crypto bulls on Twitter, they're like, buy crypto, shot the bankers. That's their motto. That's the hashtag. Shot the bankers, buy crypto. So, it's like they really want to displace the financial system, but that won't happen. You see the likes of JP Morgan coming out with their own digital coins. You see Facebook, it's partnering up with the whole ecosystem almost. Not just banks are missing, but you have the likes of Stripe, PayPal, Uber, so I would say like digital money is there to stay. What it's denominated in, we don't know yet. What the regulation will be, we can say there will be regulation. So the whole idea that we don't want regulation will not hold anymore, right? So even like people who have met in the crypto universe, like say Grayscale is investment management firm who has like $10 billion invested in Bitcoin, Ethereum and stuff. So their fund managers are wanting regulation because it gives more price stability to the crypto itself. Otherwise, you don't want an SEC hearing and the market to fluctuate 20-30% like that, right? You want, again, it's about clarity, it's about communicating like where things are. And even in the US, where you saw a lot of senators taking a dig at crypto and the Facebook coin, I mean, it has, at least in my view, kind of abated a little. Like, people aren't going all out to say, okay, this is just bad, or it's just wrong, or it's just terrorists channeling the money or funneling the money. If it's really adding value, I don't have a very clear answer to that, right? If like,
I think Zuckerberg himself made a statement, right, that I would welcome more regulation. Right. So that kind of is a testament, because I think that brings stability, as you mentioned, right? But I mean, so is it like we need to de-link the blockchain infra versus the token that's kind of coming with it, in the sense that like within the Indian context, do you think it's the back end blockchain backbone which is going to play some role here, like removing the whichever asset class comes on top of that? I mean, we keep on hearing, like, wasn't it like it was the conversation with Ankit, right, when you're talking about land reforms? You were talking about like in Telangana also, right, there were some blockchain applications going on when it comes to land. So I mean, is that kind of the I would say extraction that we will take from that ecosystem within the Indian context?
I guess so. I mean, so the intuition there was to sort of it's one-to-one mapped. There should be multiple, and each transaction is subsequent. The same piece of land, so you could put it in a digital ledger, if you will. That's sort of how I took it.
Yeah.
But how it gets linked with a token or a currency, even I have no idea.
And Consensus helped with that.
Yeah.
Which is Ethereum, the co-founder of Ethereum, his like kind of blockchain project to like really see where else we can apply these technologies.
Yeah.
So that was one of the first, if not the only Indian state to kind of, and that is a big thing, at least in the Indian context, like land reform and how you like kind of have this on record.
Yeah.
But no, I really think like, at least in the Indian context, like this will be here to stay. I mean, it's more like if you want to compare to like the internet of the 90s, like, you really want to say that, okay, I'm bullish on the internet, right? I don't want to take a call on say an Amazon or an Apple or a Microsoft.
Yeah.
But you do see, like you can be a secular bull on the internet itself, just like you can see blockchain has many applications.
Right.
Like you have some commodity exchanges which are now just fully operational on blockchain in Singapore and in APAC. So of course, even in healthcare, it's got a lot of applications.
Yeah.
But I'm not a very kind of I'm not the best person to like really tell you in what manner and what specifically how we see these applications kind of play out. But yeah, from what I've heard from like people in this ecosystem is that this technology is here to stay.
Because I mean, even if you look at Libra, I mean, that's kind of a hybrid model, right? I mean, it's kind of looking at real assets, acting as a reserve, backing the so-called crypto equivalent, right? It's not really pure play crypto from that perspective, right? I mean, they've taken one part which probably resonates more.
So like, I think like most of the people are really treating the Facebook coin, at least the people very embedded in the crypto universe, as something, the idea is born out of this, but it's so different because it is backed by $1 or a yen. The minute you use it, the funds go into the bank account. The interest of that bank account you're using to pay off the investors in the project itself, right? And of course, given that it's got so many people involved, there will be obviously regulation in this. So it will be like maybe there'll be something of a digital SEC or something which comes up. But regulation would be an important part of this, especially if the likes of Facebook are going to do it, right? Given their track record and their history and their kind of whatever love-hate relationship they might have with the regulators there. And it's going to be a global phenomenon if it ever happens and if it takes off. I mean, you never know, right? Something can go wrong till 2020.
In their case itself, right? I mean, the so-called regulators, like the independent regulator, the Libra Association, that actually constitutes of guys who are going to be vendors on the other end of the coin itself, right? So I mean, those issues probably would need to be resolved, but I do see it more as a actionable kind of variant,
right?
Because it kind of takes things from both the worlds, right? I mean, maybe the purists won't like it, but
and there's no element of speculation in this,
right?
No one will buy that. So that increases in value.
Yeah.
Because it's like got an infinite supply, unlike Bitcoin. There will be so much regulation. And at the end of the day, even though you'll still be converting it back to dollars or euros again, but how much do those fluctuate anyway? Maximum like 1-2% on an intraday basis on a bad day.
Yeah.
So, I mean, at least like the whole ecosystem or the market participants which are currently in the crypto universe who are looking for quick gains, or at least in the long term 10x 20x gains with these price targets, you're not going to get that here. It's really going to be really about ease of doing transactions across borders. So it's, in this case, you can see they're trying to add value, right? And obviously it'll help their own business model as well, because but
of course,
but
that's just a side effect though. That's not
So I really don't treat it very differently. I just think like all these things have happened, of course, because there was a white paper on Bitcoin, and which led to everything, right? You had the Bank of England release on their website many white papers on like their own digital coin for the Bank of England. So I mean, everyone's talking about it. Everyone is seeing a future in it. So I mean, Facebook coin could be. It will be there, but I mean, we shouldn't. I really can't say it's going to be a game changer right now. But it will, if it comes. Like nothing goes wrong till 2020, we can safely assume it will exist. Which we can't say for, in terms of value at least, for other cryptocurrencies.
Or for a lot of stocks on the index.
Yes.
Should we discuss Jet Airways and NDTV?
Nikhil and I have an internal joke where we say that the stock charts are absolutely horrendous looking. And we've gone on air saying like they're the worst looking stock
Right.
charts. So that's why we always try
15
to.
years of range boundedness. What better can it be?
You guys should look at this chart of Yes Bank also.
Yeah, no, that is something which is definitely playing out as we speak. Oh no, I think this was great fun, Vatsal.
Sure, it was nice, great being here.
Yeah, I hope you also enjoyed this conversation and the cold water. You didn't take coffee.
Yeah.
But yeah, I mean it's a hot day, so can't blame you. Well, on that note, I think this was a great episode. I thoroughly enjoyed it.
Yeah, likewise. Thanks for your time.
No worries. Really nice being here, and look forward to being here soon.
Oh yeah, for sure. And yeah, with that, I think it's time to call it a day. And we'll obviously welcome all our listeners to comment on this particular episode. Tell us what you like, tell us what you don't like, and we'll try to make it better the next time. And this is Nikhil Arora.
This is Sharad Tupran
signing off.